What's up, freaks? It's your boy Marty Ben here to introduce this episode of Tales from the Crypt. Sat down with Mason Jappa and Sam Chwarzynski from the Blockware Solutions team. Talk about mining, the macro landscape, the liquidity crunch on the Bitcoin markets, and a bunch more. Enjoy this episode, freaks. This is brought to you by our good friends at the motherfucking Cash App. They're helping us pump it up. We're gonna pump it up. Don't you know? Pump it up. Gotta pump it up. Cash Apps helping us pump up that price floor by making it easy to stack sats. You can stack sats, send sats, receive sats, and sell sats if you so please via the Cash App. We're saying sats. Because you don't have to buy a whole Bitcoin. People don't know this. There's 100 million sats or satoshis in one whole Bitcoin. You get 100 million sats, you have one Bitcoin. You can stack as little as $1 worth of sats. And currently, one cuck buck is going to get you like 1,863. We just hit $1 trillion market cap as I'm reading this ad read. Let's go, freaks. Let's go. 1 trillion. Stacking sats on the Cash App helped push us there. What a day. What a life. What a time to be alive. I love being here with you freaks. Go download the Cash App. Use the code STACKINGSATS. That's STACKINGSATS. You're going to get $10, and $10 is going to go to Al's Lacrosse. And yeah, we had just hit 1 trillion. Enjoy.
You've had a dynamic where money's become freer than free.
If you talk about a Fed just gone nuts, all the central banks going nuts.
So it's all acting like safe haven.
I believe that in a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor.
I mean, that's part of the bull case for Bitcoin.
If you're not paying attention, you probably should be.
What is up, freaks? Welcome back to Tales from the Crypt. It's your boy Marty here. It's snowing where I am. It's a snowy Thursday. It's Thursday morning. I had to shovel my front steps, front patio, go to the food store. Got a little chili cooking downstairs, and we're here. I got a fire next to me, and we're here to talk about mining with the Blockware Solutions team, sitting down with Mason Jappa and Sam Chwarzynski. What's up, guys?
What's up, Marty? Glad to be on. No better time to talk about mining. You know, waking up to a giant green candle. It's like it's the greatest thing to wake up to, especially as a miner.
Yeah, I've got my block clock mini downstairs tracking the fees per block over the last 2016 blocks. That's approaching 1 Bitcoin. So fees are going up as well. Revenue's going up. Very profitable to mine right now if you're got the right rigs and the right cost of power production. Let's jump into it. You guys have two things on top of my mind that I want to talk about that you've put out from a content perspective. First was a thread about a few weeks ago about mining as a good DCA strategy to sort of temper the volatility, the price volatility of Bitcoin. And then a big research piece you guys published January 21st of this year about the 2021 Bitcoin market outlook. 40,000 is only the beginning. And as we sit here at 47,000, that seems to have been a very prescient title for this particular research paper. So let's just jump into it. What's been going on with you guys? Let's start with the DCA, like describing mining as a good DCA strategy. Why do you guys believe this is so? Or I think you guys have the data to back it up as well.
Yeah, I'll kick it off and Sam can add some context. So kicking off with dollar cost averaging. So miners receive, daily mining rewards, for their hash contributions, and depending on their pool structure, will have different payouts. So miners receive not only their block rewards for the contributions they contributed to mining blocks, but they also receive transaction fees on tops, which you were alluding to. So today we're at an average block plus transaction fee of 7.6, which is amazing for mining. That's an important factor in this. So think about mining as the best way to dollar cost average, because you're buying into a heavily volatile asset like Bitcoin. dollar cost averaging for any volatile asset or commodity is an excellent strategy to have over time. It allows you to receive an allocation on a set daily basis, and you're mining at a cost that is less to buy on the free market. For miners, your cost of production is truly mostly correlated to your energy. We found that it's about 90% of your cost is energy, and then the remaining is allocated towards your OpEx, and typically you keep CapEx out of your cost reduction. So miners on a daily basis receive a set amount of Bitcoin, which is a combination of which is mapped to the hash rate that they mine for blocks plus the transaction fees, and their profit is the difference of their cost of reduction and the current price in Bitcoin. And what we've seen in historical bull cycles and what we're seeing in this cycle is Bitcoin prices outpacing difficulty. So miners, are in an extremely well position and are capturing, excellent dollar cost averaging. And your strategies as far as what you do with that Bitcoin can, hyper accelerate your return on investments. If you're in a bullish sentiment and you hold on to that dollar costed Bitcoin and pay for electricity out of pocket as much as you can with USD fiat, you can hyper accelerate with your returns. That Bitcoin that you've been mining in July is now worth $47,500, right? And then it was worth much less. So that's important to take into account.
Yeah. I think another thing that makes mining unique and is that it removes the psychological factors associated with the price volatility, right? Even in a sideways or a downward market, if you bought Bitcoin and holding, you'd make no money or you're losing money. Whereas if you're mining, even in a sideways or downwards market, you're still generating return, generating Bitcoin below market value, assuming you have efficient rigs and a decent energy rate.
Yeah, it's a great way to DCA. Just working for Great American Mining and then just seeing the daily sats roll in from our hash rates feels good. And mining's been a much maligned industry in the Bitcoin space, particularly up to this point in Bitcoin's life, right? Like it's always, just buy Bitcoin, don't mine it. Like you'll be better off. But again, like you guys have alluded to, if you can execute and get your all in cost of power production down low enough and execute from a plugging in the miners and making sure that they run as long as possible and have considerable uptime. It's a pretty good strategy. And I think it's a theory I've had for quite a while is that there's going to be a tipping point at some point in the future when Bitcoin is widely accepted, or just the masses capitulate and say this is going to be here, where a lot of the companies that have been naysaying mining are going to realize that they actually should probably have invested in and become miners to some degree, because it's going to be the only way to access Bitcoin at some point in the future when you consider the amount of Bitcoin that are being taken off the market by these large institutions and other big players.
I agree entirely, and it's already happened. Last week, we put on a digital conference for Bank of America's energy desk, where they were looking to leverage their existing portfolio of heavy electrical assets, whether that's factories or steel mills operating at partial capacity to what they can, or whether it's actual, quote unquote, behind the meter, like power generation assets. They're, everyone's starting to figure it out. And, luckily there's a bit of a lag. There's still a bit of a lag, but I think it's all trending to, increased commoditization of Bitcoin mining specifically. We'll see, more of it over the years, just distilled down to these behind the meter type.
Yeah, I think there's going to be a big wave of hash rate coming to North America, which is like your goal as a company, correct?
Yeah. Our messaging is let's bring Bitcoin and Bitcoin hash rate into the hands of Americans. It's a matter of national security. We need to decentralize the network. We need to position the states as being a leader in this sector, and that's currently not the position. We need to take control and make moves here, and we need institutional backing. We need people to go in heavy, and we need people to go in right now before they miss the wave. The wave's already, partially been missed. We were telling everyone an excellent time to deploy was right at that March timeline,
This
right?
time last year. Right?
Yeah, everyone capitulated. The institutions and large miners and those that had the lowest cost energy bought up, and all the puked S9s, for example, that were 15 or 25 bucks. Those are selling for between $200 and $250 now, and their break even costs are insane. I mean, it just proves that. Another point that we don't talk about, I think a lot of people miss in their forecasting as well, is that miners have a perfect positive correlation to the price of Bitcoin. So that means that as Bitcoin goes up in price, these machines are going to go up in price, and we're seeing the heaviest supply constraints that we've ever seen in this marketplace. And we're seeing a lot of other things that we've never seen in this marketplace, right? This parabolic uptrend. So, people that bought machines last year, their machines may have 2 or 3x in value by now. And they've been mining those machines or just receiving delivery, and their mining profits and rewards are also, extrapolating. So it's a double exposure to Bitcoin with the mining rig appreciation and with the mining dollar cost averaging.
Yeah, it's a beautiful time to be a miner, especially again if you're able to plug them in at some point in 2020. It's
yeah, exactly.
Again, like you mentioned, like the institutionalization of mining is beginning to happen. We're seeing a bunch of these public companies use equity funding to begin financing expansion of their operations. I mean, Marathon and Riot, particularly here in United States, are making some big splashes in the hardware market, buying massive orders of Bitmain machines. What are you guys seeing from this perspective? Are the institutions gonna crowd out the little guy? Are they gonna?
I think that's already happening, right? That's why you can't get a new S19 until September 2021. But the beautiful thing is, for miners who are already currently mining or have access to rigs, immediately, is the one bright side of the supply constraint is, difficulty can't keep up with these price increases when we're just in price discovery mode, ripping through highs, right? So although price is up however many, 2x since January, I think, since the start of January, difficulty has been a pretty slow and steady march higher, just because these manufacturers can only deliver so many rigs.
Yeah. And then I have the question too, like on the backside of that delivery, what are some of the companies that are making these big orders? I know Riot is really good at executing, but like others in the space that are buying massive, are they going to be able to execute when they buy these miners? Like seeing Marathon buy $100 million worth of Bitcoin last month after buying all those rigs had me start questioning, maybe they're realizing they may not be able to plug in 70,000 miners. But
that's a great point. Yeah, with Mara, we've been talking with a lot of the larger players, and they partner with that coal plant, but that it's not ready, and it's not ready to deploy 70,000 S19s, right? You think about how much the energy consumption of that. But we're seeing a lot. I'm also on the advisory board of Rights, and what they're doing, they have a home for their machines, and they're likely going to shift towards vertical integration. And but we're seeing other companies taking large positions, like Bitfarms and Hut 8 both did in Canada, both just did some debt financing rounds and raise capital to buy machines. They're deploying, and they're mainly Hut 8 and the Bitfury ties, but Bitfarms is deploying WhatsMiner machines and at scale. You have Galaxy Digital that's also taking in positioning where they're specifically WhatsMiner only, and they purchase tranches of machines, they're mining tranches of machines, and then they're offering financing on machines that they purchase. But really, the one that I wanted to highlight, and I think one of the real enablers of all these large entities, is Foundry. Which rolls up through Grayscale. So they've deployed $143 million in capital towards mining in North America, some of which, and a lot of which, is for their own self-mining equipment. We believe they have over 700 petahash operating in North America. And then they're also offering companies, and many of these well documented, financing deals to buy future batches, where they'll finance it, they'll take their interest. You pay X% down now, you pay the rest over a cycle of, let's say, 12 or 18 months. then you get your machines. And it's interesting with their messaging is they were very much well aware that they're better off just buying these S19s and holding it themselves, especially with the backing of Grayscale, where it almost seems like they have an unlimited cash balance. So that, I mean, they're truly an enabler for North American mining, and they share our message, like bring Bitcoin and bring Bitcoin hash rate to America.
Yeah, GBTC could bankroll a lot. I imagine. Yeah,
unlimited cash flow and balance sheet. That's nice. Must be nice.
Yeah, they've taken advantage of that product very, very aggressively, and hey, good for them. They're raising a shit ton of money, and the fact that Foundry came out of nowhere with that mining pool too, right? Like the
Foundry mining pool
just popped up. Hey, guess what? We have 7% of hash rate or something like that, 5 to 7.
Yeah, I mean, it's most of it's their own self-mined, and they have a long-term, goal there. And I agree with them, right? You want to truly bring hash rate to North America, you have to mine on an American mining pool or North American mining pool. If you're mining in North America and you're pointing your hash rate to China, you're not bringing hash rate to America. So that, I like to correct people. It doesn't matter where you're domiciled. If you're pointing your hash rate to China or another country, which is okay. I mean, some are fine, right? But we need to decentralize the network, and Blockware runs a pool. We've got about 315 petahash online, and we operate on US nodes. So.
Yeah, no, and that's, I mean, we're relatively small right now to Great American Mining, but we have ambitions of having like a flared gas mining pool specifically. And I think that you see all the mining pools over in China. I think there's going to be a massive shift over here in the US as well. Massive.
I hope so.
Like the opportunity, right, is massive from a cheap energy perspective in North America alone, to bring hash rate here. And then like hopefully, like right now, the ASIC supply chain is obviously very constrained and spread thin, but and obviously as the price keeps going up and demand for mining keeps going up, hopefully the supply chain will be able to meet that demand and expand their construction of these miners. And then you have things like TSMC and Samsung starting to build foundries in the Southwest of the United States, which is incredible to see. I mean, the news from Samsung yesterday is massive in my mind. A $17 billion fab in Austin, Texas, and that should be done by 2023. So Bitcoin ASICs probably won't be prioritized on that particular foundry right away, but it's not hard to imagine that you have ASICs being produced on US soil within the next 5 to 7 years.
100% agree. And that's the vision. We need to bring manufacturing also to North America. With trade wars with China, where most of the manufacturers are domiciled, you're exposed to a 25% tariff and 2.77% duty. If it doesn't, add to the trouble, how hard it is to get machines in the first place, we're getting taxed on those imports, and that creates an ROI extension for us. So there is a secondary market, and that's something that Blockware Solutions does really well. We sell a lot of used machines. We have access to and work with some of the largest mines that are upgrading, so you can get some nice miners, like M20S is used for a reasonable cost, or like S17s or S17 pluses. Something that we offer through our other entity, Blockware Mining, is the ability to get up and hashing within 48 hours, which people love, right? We have used machines, they're running now, they're fully testing. We de-risk the ordering process. We'll sell you a hosting contract, and you can be up and hashing within 48 hours of that completion. And we enable retail. We brought it up earlier, but by partnering with hosting facilities that can offer fair hosting rates and such a service, retail isn't necessarily shutting out. Over time, it'll be a race to the bottom of energy costs, but during such a market that we're in, paying a hosting rate of 6.5 cents is totally feasible. And that's certainly supported.
Yeah, no, it's like, it's the question I have is this the run? Is this the run where we don't have like an 80% drop after? Probably not, just because I'm asking the goddamn question in the first place. But Like if this, like, so let's jump into your most recent research piece. Like 40,000 is only the beginning. Where do you guys see this going from a price perspective? And then what does that do for the dynamics of the mining industry, particularly from a cost of power production perspective? Like at what levels will mining be profitable during this bull run?
Sam, you want to kick us off?
I mean, hell, you can, what's a break even on an S9's at 6 cents right now is still at 20K Bitcoin, I think, right? So I think all the smart, efficient miners who were just scooping and storing those $25, $15 S9s pre-halving in May and right after halving, all those are already plugged in. All of that old stuff. That's why there's such a constraint on finding hosting for large scale deployments. That's why we're seeing such a marginal incremental increase in difficulty despite these price rips. So all the old stuff's already being run, and it's just hyper bullish on all front. It continues to be this rally continues to be disproportionately driven by institutions. Every dip gets bought sooner and sooner. And every time it's like, all right, here comes the good 50% correction, on the way to the top, on the way to the top, and it gets bought up immediately. What were we working with? I think 9 or 10 corrections, averaging like 35 or 33% in the last cycle. I don't think we've cracked 35 yet.
No.
We had that 30% correction.
I think 29 and change was the largest percentage correction so far, and I'm talking from the March lows. But
yeah, no, I mean, people trying to. I remember in January, people like, it's going to 27. Didn't get there. Like this last little correction this week, people like, it's going to go back down to 35, 30. It didn't quite get there. The combination of these institutions coming in, and then on top of that, you have like a liquidity crunch on exchanges, like you have in your research paper, like the Glassnode data of people pulling off their Bitcoin off exchange.
You took the words out of my mouth. Exactly. I think that's one of the most bullish indicators as well, is seeing, like, and it truly hammers home the point, the digital gold narrative. Obviously, we had the Fed and every other central banker's massive overreaction to COVID, and the money supply set to increase by 40% in the last 2 years after this most recent round of stimulus. Sorry, AirPod down. Whether it's an inflation head or just a pure alternative store of value, really seeing the original digital gold narrative take hold more and more.
Yeah, and
whether it's Elon or anyone else or Mass Mutual or
and you have like a number of factors, right? So like from the macro perspective here in the US specifically, a 1.9 trillion stimmy appetizer. You had Powell come out earlier this week and basically allude that unemployment numbers were actually being undercounted. Like he said, it says like,
no surprise.
Right? He says like, it's like reported at 6.4%, so that means it's actually 10%. So that like you have them sort of not backtracking, but trying to save face.
Priming.
Yeah, priming for like an antipasta after the appetizer before you even get to the main course and dessert. It's going to be insane, and thank God we have Bitcoin.
Right? I'll tell you what, this is one of the things that initially drove me to Bitcoin and Ether back in 2015. I was out of college. I was a prop trader at a firm called Gelber Group in Chicago, mostly spot FX, a little bit of futures, equities, commodities, etc. But for the longest time, when I first started, which was like late 2014, you'd wait for a data point. Dollar positive, you buy dollars against whatever was weak at the time. Dollar negative, it was a monkey could do it. I was like, oh wow, I'm gonna be rich super quick. And then the first Fed meeting comes, and they remove the phrase like data dependence, they removed patience and a couple other things. And then that data trade was gone. So for like a week after that, those data points, I'm like, why isn't this working anymore? It's like, oh well, the Fed removed that sentence from their statement.
Like, what do you mean? Like that ruined this whole trade. And it, you go down the rabbit hole and you start realizing that central bank monetary policy has been the driver for every single asset for at least the last 20 years, probably longer.
And people so I was actually in Chicago working at a managed futures fund at the same time as an analyst, and like in 2013, 2014, fucking markets were trading based off of what color jacket Janet Yellen was wearing, to a meeting. Like, oh my God, she's wearing purple. It's regal. She's dovish.
Exactly.
It's and then so in the I worked at a fund of funds, the people at the top, like the chief investment officers, some of these CTAs are completely oblivious to the Fed's influence on the markets. You'd be as an analyst, I'd have to ask some questions. What do you think about the Fed's policy? Is it affecting markets at all? No, not at all. Not at all. It's there's been this shift in understanding of the Fed's influence over the markets. The understanding's probably been there, but most people just didn't want to admit it. But it's gotten to the point that it's impossible to ignore.
If you want to really hammer that point home, all you got to do is pull up any chart, cover the asset, what asset it is from March through the end of 2020, and they all look like the same to varying magnitudes, just straight line. And it's to the day they all happen to bottom.
Right, and because a lot of that was QE driven, but now with these fiscal stimulus for your airdropping money into people's bank accounts and into social programs or infrastructure programs, that's going to be, we've seen this asset price inflation, but do we see consumer inflation? I mean, they've already been saying they want CPI to be over what their typical 2% target is. Are they going to be successful in inciting that? I think they may be.
Yeah, I mean, this QE infinity charade is going to end very badly eventually. It could be another 2 decades from now. I don't know, but like you said, thank God for Bitcoin, and thank God for the growing decentralized digital ecosystem.
Yeah, but it seems so. That's the other thing. It's weird. Everybody knows it's going on the Fed, but then the other side of Wall Street, the other side of the Fed's window, all these banks are starting to wake up. In your research paper, you have a list of institutions that have talked at least somewhat positively to neutral about Bitcoin: Citibank, Morgan Stanley, Guggenheim, JP Morgan, Goldman Sachs, Stanley Druckenmiller Miller, PTJ, obviously Mass Mutual. This morning we had BNY Mellon.
Yep.
BNY Mellon came out.
I mean, we did.
I think MasterCard as well yesterday or this morning or last night or something.
Yeah. Then you have Square, PayPal, Twitter, rumors of Apple. And it's funny, many of these banks were naysayers, and then they changed their positioning. Maybe they were naysayers so they can accumulate and buy the dips, right? I would not be surprised.
Not in the least bit.
Look at all the criminal activity that's taken place with these banks over the years. I mean, it's eye opening, and you think Bitcoin has negative sentiment around it. Look at the active and proven crimes that have been committed, and the fines that have been paid up, and the admittance around that, and then the brush off. It's insane.
Yeah, and that's it's just these banks have been known to manipulate markets, particularly precious metals. JP Morgan specifically.
LIBOR scandal a couple years ago. I mean,
LIBOR, gold fixing. Yeah, just meet me in G-Chat. We'll fix this market. It's how it used to go, but it'd be interesting to see how they adapt, considering the nature of Bitcoin, the asset, right? And that's pristine collateral that is sitting on a public ledger. Do they adapt their businesses and their models to this asset as they adopt it? That's another theory I'd love to jump into with you guys. So I think what we're doing in the mining industry, again, like I said, mining has been much maligned up to this point in the Bitcoin industry. Just buy Bitcoin, don't mine. But I have this theory and like if Bitcoin plays out the way we think it is, I think it's a pretty sound theory that you're going to have a transition of the financial stack moving from the Fed window, where there's the base of the financial stack now. The Fed, in conjunction with the Treasury, controls the production and distribution of money to the primary dealers via its window. That's going to shift from the Fed window to like the mining level, the mining pool level specifically. I think we're going to have this new financial stack emanate from a mining pool base, and you're going to have derivatives and financial services being built from that base up. And it's not going to be, you're not going to be playing the Fed window game anymore. And I wonder if these institutions are ready for that transition.
See, I don't know that the US dollar or the Fed's ever going to be purely displaced. I think a system like the one you just described is definitely being built out and will be built out kind of in parallel as we see this traditional central bank, or the war on cash, as it's been called for decades, continue. I mean, the central bank digital currencies make sense, right? It gives them even more strict control over their money supply, issuance, everything. So I think that's an inevitability at this point.
It's Ken Rogoff's wet dream.
Right.
I mean, I think it just comes down to, are they going to use that as a rationale to say, well, you have our digital currencies, you don't need Bitcoin, and try to ban, self-custody? Or are they going to embrace Bitcoin as the first native digital currency that it is, and, build on top of adjacent to it? I think, unfortunately, I don't want to speculate, but I think that potential, displacement of the underlying currency of the financial system is probably multiple decades off.
Yeah.
I do think that we're going to see more and more emphasis put on the mining perspective, because there's already people building out, like there's a market, banks, institutions, people building large treasuries of Bitcoin. There is a market for, quote unquote, virgin tokens that can be tracked, from genesis, from the time they were mined to the wallet. And I would imagine that type of market grows, and, those Bitcoin continue to trade for a slight premium.
That's such like an interesting topic to dive into. Like,
yeah.
Is it true? Like, is there really demand for these virgin coins, and are they truly virgin, untainted? Because again, you have the fees and the block reward too. Yeah. That's sort of
how do you separate it? The virgin token thesis is interesting. It hasn't played out yet, but in the future it may, especially when you're dealing with like corporations as holding treasury, and but
even things like green Bitcoin, right? Bitcoin that you could prove you've mined with 100% renewable only resources, to counteract the quote unquote carbon footprint issues that are being caused by mining, which are just not true. FUD, obviously, but
So do we lean into that FUD and like change the dynamics of the network because of some poor thinking and mental frameworks from the incumbent political system? Like that's where
absolutely
I worry.
Not
right. Like
absolutely not. I hope not, but it's.
I mean, they're going to want to do it. They're going to want to do it. The question is whether or not we should bend the knee and succumb to their wants, especially considering the fact, like we mentioned, the traditional system is the avenue through which most of the crimes that these politicians and bankers cry about facilitated HSBC working with the Mexican drug cartels with their form-fitted window teller for briefcases full of cash. Like that's it's like the whole Blockseer, like OFAC compliant mining pool and stuff starts to scare me, because you start to bifurcate the network to a certain degree. And I want the mining industry to be as free market as possible. Again, like at the end of the day, like what I think we need to start pushing forward as an industry, as a mining industry specifically, is like, hey, Bitcoin is just simply a messaging protocol. Like you don't hinder AT&T because terrorists use their cell phone networks to coordinate. They have conversations over the phone like that, and you're not going to hinder AT&T from doing any of their business because they're able to coordinate like that. In this Bitcoin's a messaging system, just like these telecommunications networks to a certain degree. Like, why should it be singled out and sort of put in a corner and handcuffed when compared to these other things that arguably aren't subjected to the same type of scrutiny?
That's a great analogy.
Yeah, 100% agree. And I mean, back to that other point, I think, Bitcoin, there's a lot of FUD that goes in the market about, the amount of energy consumption that's aligned to Bitcoin and Bitcoin being bad for the global, environment and being a bad use of energy. And, we argue the reverse, right? Bitcoin, many people Bitcoin as an energy consumption can actually stabilize a grid and network, right? There's off-peak arrangements that many large mines have that are domiciled right outside of cities that help stabilize the energy rates. They agree to shut off their energy at set times to stabilize peak hours that are hit for city and consumption during certain timelines and timeframes. We're helping out the people. We're averaging and lowering your energy costs. It's been studied and speculated that a large portion of Bitcoin mining is on renewables, and is moving in that direction. We know it's a race to the bottom. There's a couple projects I've been talking to recently that have invented proprietary systems that can convert landfill to energy, and then you build a Bitcoin mine right on a landfill. And waste disposal is a huge issue globally, right? And you actually get paid for disposing of that waste. So if you build a mine off of the landfill, you're getting paid for the waste disposal, and you're receiving your mining income, and you're helping a greater good and cause. Miners are some of the most creative people in the world that get no credit. There's just FUD getting pumped out on mediums with ridiculous conclusions, and it's just not backed, and it's quite the opposite.
Yeah, it's very lazy, uneducated criticisms that lack critical thinking. Like what we're doing, like people point to what we're doing at Great American Mining, like, oh my God, you're using methane to mine Bitcoin. But like the way it changes the dynamics of the oil and gas industry for producers specifically, it's pretty massive. Like the secondary and tertiary externalities are such that, like, right now, like these oil and gas producers are IPing wells, many wells, to get as much oil to market to make up for the depressed price relative to where it was 12 years ago, when they took out a bunch of loans that said, hey, we're going to pay back this loan, and our target per barrel price per barrel is like $80, and it's nowhere near that. And so they're trying to make up for that lack of price appreciation with volume, getting it to market. So that means more pipelines, more wells, which means more wells, more pipelines, more flares, more LNG units, which is a lot of infrastructure and a lot of waste from a gas perspective, and a misallocation of capital, arguably. Now that you can plug in these Bitcoin miners alongside your oil and gas revenues, you have a separate revenue stream that's driven by completely different demand structures than the oil and gas market. You have a revenue stream driven by a service that's demanded 24/7, 365 as well, which is adding blocks to the Bitcoin blockchain. And now that you have that supplementary revenue stream, you don't have to build as many pipelines. You don't have to drill as many wells. So like, even though the Bitcoin miners that we set in the field, they're consuming methane, but again, they're consuming methane that would otherwise be wasted. And then I don't think people think about the second and third order effects down the line, where you may not drill as many wells, you may not make as many pipelines, and that has profound positive effects on the environment and the climate debate.
Exactly. You hit the nail on the head. These Bitcoin miners are seeking the cheapest electricity, and by virtue of it being cheap, it's cheap. It's because it's not wanted. It would be going to waste if not otherwise consumed. If they were consuming a fuck ton of energy that was needed for another important purpose, that electricity would be charged for a premium, and sold off back to the grid or back to the consumer. So we're alleviating a lot of spillover and inefficient and waste, as your point with the methane. And excuse me.
Bless you.
And then I forgot my point now.
Well, I'll hop in here. I know you guys were just on Noted, right?
Yeah.
Like I think Pierre had a great tweet last night that really highlights the hypocrisy of people coming at Bitcoin mining's energy consumption. Is that like Bitcoin miners use electricity just like Tesla cars do? It's like the moralization and like the ethical debate that's trying to be thrust on the mining industry because of the energy sources that are used to produce the electricity. It's just like a complete double standard. It's not applied to anything else like in the world.
Yeah, I mean, and Bitcoin miners optimize the energy network. In truth, like that is a fact. And I mean, if you think about energy in general, like depending on if you're pulling from the grid or what your source is, energy isn't extremely transferable. Like I can't transfer energy that I have in in upstate New York where I have hydropower to New York City. I have no way of creating a chain that transfers it that far. With advances in technology, I mean, that's why you see a lot of miners in upstate New York. They're harnessing, that excess hydro and putting it to use and making it more efficient and helping, regions that are just wasting excess energy or not producing as much as they can, right? And with improvements in technology, solar in the future, a big issue with solar is, having that 24-hour ability of mining tied to solar. But with the battery improvements that are coming, you mine, you consume the amount of solar that you have, you build out excess, and then the excess solar that you harness during the daylight, you can store in a battery to power your miners overnight. It just creates an efficient system and mechanism. I mean, I argue that miners are the most creative and forward thinkers in the energy space, and they're improving the efficiency and they're making strides that wouldn't exist otherwise.
It's
talk about an energy transition trade. You know what I mean? Like that's been a big thematic trade. You hear them talk about it on MSNBC and all this other nonsense, and it's one of the big a lot of the questions we got during our B of A conference circled around like, how can mining absorb this glut of renewable energy that's coming on that is not going to have any buyers for the energy once these government subsidies run out? These companies and these projects only spun up and developed because they're getting government subsidies, which run out, I think, a lot of them this year and next year. What are they going to do when they don't have anyone to sell power to and no one to transmit it to? You just talk about a wasted environmental footprint, because I mean, these wind or solar or whatever it is, they're not small. These aren't small endeavors. They take up a lot of space,
and they take a lot of oil too. They depend on the oil and gas industry pretty significantly. So it would be a shame if the subsidized renewable industry has wasted all this fossil fuels to have it sit there. And that's the beauty of Bitcoin mining, right? It's like market driven. You don't need these politicians to come in and subsidize anything. Like, we're figuring it out. Like, just leave us alone.
Exactly. I mean, look at what you were just talking about with the flare gas, the waste. It's like, wait, you guys are burning that, but I have a methane generator. I can hook it up to this trailer of rigs. Can I take it? Oh yeah, sure. Go ahead. Save us on emissions. You can have it for free. Just bring your own shit. Bring your own equipment.
Like I was telling you, like we're in North Dakota right now deploying containers. And like we're focused on North Dakota right now because they have the strict, like producers are begging us to come in. Like, please, like we don't want to flare because we can't drill or actually pull oil out of our wells if we flare X amount. And this is going to start happening in Texas too. Like Texas Railroad Commission and the state Senate is talking about levying a 25% tax on flared gas. And like, so you're going to have flaring X amount of MMBTUs per day or MCFD. And you're just going to look at the Henry Hub price or some other gas index price. You're going to have to pay 25% of that flared gas. So you're going to have to make up for that somewhere else. whether that be in flows of oil, or trying to build pipelines to get that gas to market so you're not flaring. Bitcoin solves this problem beautifully.
Yeah, exactly. I mean, Canada's been a really good flaring use case to look at. I mean, the amount of flaring reduction emissions that they've progressed as a country. I mean, just our neighbor, like, why aren't we enacting the same? And Bitcoin is a great, use of countering flaring. Flaring is not good for the environment, and that's something that is a very valid point. And these natural gas producers are, produce a certain, a finite amount of energy on a daily basis. A lot of that is not consumed. What do they do with the excess? They light it on fire, and which creates a lot of downward spiral environmental issues and other issues associated.
And you're literally lighting money on fire. And so that's
literally.
That's what that's what we're doing as a Bitcoin mining industry, whether it be via mining off of renewables or what we're doing off of gas that will otherwise be flared or wasted purely. We're helping to decrease the energy intensity index, right? We, as a society, we should strive to drive the energy intensity index down as low as possible. And for any of you freaks at home who don't know what the energy intensity index is, it basically calculates the amount of energy that we pull out and combust, pull out of the earth or produce on earth, compared to GDP, the value extracted from that energy. So flare gas is a part of this index, but it doesn't produce anything to GDP. These renewable sources that are sitting in areas that don't have demand from a city, but that energy is still being produced and converted to energy, like that contributes to it too, and it doesn't contribute to GDP. So if you're able to plug in these miners and create something that's positive EV for GDP, you can lower that index, and it's something we should be striving for. This is something like people should be lauding what we're doing in the Bitcoin mining industry.
100%, and it creates tax revenue that didn't exist in the past as well. Like from a state perspective, I mean, there's you look what happened with the cannabis industry and the slow approval of cannabis. The states are seeing the tax dollars that have come in from the legalization. New Jersey legalized, everyone in New York was not legalized, so then New Yorkers were just flocking over to Jersey to buy all their legalized cannabis, and then of course, lo and behold, very few months later, New York's on that path. I mean, it's a state by state battle also with acceptance of cryptocurrency miners. Historically, you've seen miners driven out of upstate New York moratoriums, out of the DC area, issues in Virginia, issues in Washington state. Like Kentucky's been where we're domiciled, and we have a new facility that we're building. We're going to be building a 50 megawatt facility in Paducah area, and we have a 20 megawatt facility running in that same area right now. They've incentivized miners. They've taken the opposite. They're passing a bill that is going to incentivize cryptocurrency miners to come there because they see the opposite side of the spectrum. But it's just, every state has their own governing laws. So you'll see miners flock also politically to states that are supportive. Texas has been certainly one of those, and a lot of people flock to Texas because it's an energy hub of the world. But in Texas, they you deal with July and August peak hour rates, mooning. So what do you do in mining in July and August? You shut off for partials. You're not going to be able to run for 24 hours a day. And the Texas energy commodity traders live for July and August. That's where they make all their money. It's really interesting to see who's going to win the state battle, and naturally miners flock to where the cheap energy is at. So you can't, you have to have cheap energy in that state in the first place.
Yeah, this jurisdictional arbitrage is beautiful to see budding. Like you got Francis Suarez in Miami, like trying to get Bitcoiners. Like what's going on in Kentucky is incredible. North Dakota isn't really incentivizing Bitcoin miners per se, but their strict flaring regulations is just forcing miners to flock there because they can help solve that problem. And in Texas is an incredible case. Like once you crack that nut of cheap cooling immersion systems off grid in Texas, it's going to be a mad dash down there. In
Texas, yeah, for the energy source reasons and as well as the political certainty, right? I think those are the abundance of renewable, unique energy sources, and you're pretty confident the government in Texas isn't going to come in and tell you can't run a mining rig, you know what I mean? As opposed to potentially some other states.
No,
and that's what's driving more of this hash power to the U.S. is exactly that. Political certainty alone is worth the short-term premium that miners are paying now, and then they see how the energy landscape in America, particularly Texas, is evolving. Look at what Texas did to the price to produce about a barrel of oil once we figured out shale. Like the only ones who produce oil lower than U.S. shale is the Saudis. We're on par or lower than everyone else in OPEC. It's American ingenuity and just free markets, baby.
Well, yeah, that's what I was going to segue into there. Texas specifically, like the regulatory certainty is compounded by like the actual free market energy market they have down there, like the open grid system, which is unique to Texas alone. Like the rest of the country needs to adopt Texas's model of how they run their grid. Like it's just a pure free market with no state actors. I mean, you have the Texas Railroad Commission trying to play referee every once in a while, but it's pretty much a pure free market in those regards.
Talk about decentralization. You got the rest of the country on one of two separate grids, basically, essentially, and then you got Texas on its own.
Right?
We don't want to rely on you guys. We'll take care of our stuff.
Well,
did you see that? Did you see that like bill that was being considered in Nevada, where like they're trying to incentivize large tech companies to domicile there, and they're offering them the ability to set up their own governing law, like their own school systems, their own courts, their own like entire societies, like in Nevada. Like I've read. I mean, you could Google it. It's just like I'm like, what is going on here? And it's specifically targeted towards big tech companies coming to there. Like, and would I want to live in such a society? I don't think so. Like controlled by like the tech company.
It's the technocrats making their own laws. Be careful what you say.
Literally. Yeah. Well, true. I mean,
didn't Nevada turn blue this year? They're not going to get any tech companies with that color. I don't think. No. I think that the flight from California, from New York, and from these other hubs
Texas. I mean, I hope Texas can stay red for as long as possible, considering.
As long as they keep rejecting those Dominion voting machines, they should be all right.
Right. That and like, yeah, I mean, they've got
Samsung
coming with a foundry, Tesla's coming down there, like the migration from Silicon Valley to Texas.
Toyota migrated down there a while back from Cali from Tarzana to Texas. I mean, everyone's migrating to Texas. I mean, isn't
that where Taiwan Semi's opening their facility as well?
Yeah.
Or is that
Arizona? They're in Arizona.
They're in Arizona. Okay.
Samsung was Texas. Yeah.
I'm extremely bullish on chip fabrication in the U.S. over the next decade, because we also found like a pretty large rare earth mineral deposit in New Mexico. So like we can probably source some of the materials needed for the silicon right in the U.S. too.
That's beautiful. I didn't see that, but that's exactly what I was going to ask you when you said you were bullish on the chip foundries. When was that published? I didn't see anything on that in terms of
I'm gonna look it up real quick. I think it was found at some point last year. I know of just through the grapevine some deals that have been going on in the PE space to start extracting this stuff. Rare earth elements deposits in New Mexico. This is from the news. There's something about it 2 days ago. I got to find the exact article. I'll try to find it and link to it in the show notes. But yeah, it's been.
No, that's cool. I mean, that would be hell of the news. I mean, if we can have all the sourcing needs and requirements, domiciled in the States, build our own intellectual property here and start manufacturing machines here, that would be very fruitful.
Right, and it's bringing back industry to America.
Yeah,
that's what I love. That's what I love about mining and the physical nature of mining. What you guys are doing, again, setting up all these warehouses. Like there's a physical, and we're actually building again on American soil, not the miners yet, but the infrastructure that the miners run on is being made in America.
Yeah, I mean, miners in general are the most bullish people on Bitcoin in the world. They're investing billions of dollars in infrastructure. They're investing billions of dollars in machines, you know, ASIC high-powered servers that are not repurposable. They have one job, that's to mine Bitcoin. You know, that's how bullish they are on the network. And the infrastructure is repurposable. I mean, we're creating jobs, we're creating tax revenue, we're creating power efficiency. We're creating a counter against deflation and supporting that. There's a greater good here. Miners are driving the wave on top of, you know, everyone else that, of course, the Bitcoin maximalists you can't forget about, that are supportive of mining as well, you know, that are hodling and supporting and getting out the message, right? We just need positive messaging continued to pour amongst the space and around the world around this narrative. And I think that's, you know, very important.
Yeah, lucky for us, we have some of the smartest people. I think that's becoming more evident. I think it's just when it comes to actually debating from first principles, using critical thinking to approach these topics and these debates, like at least from my observation, it seems that Bitcoiners are winning the battle of ideas. I mean, you're fighting against very loud and strong narratives, but when you actually are able to sit somebody down and have like a one-on-one conversation, it's not even a competition in my mind.
It's not. It's really not. And the crying and kicking and screaming on the other side doesn't counter our proven facts and data and narrative and our intelligence and our intellectual arguments. We're willing to debate. We're willing to counter, and we're willing to bring the truth, you know, forward. Arguing against the truth is not, you know, with tactics that don't make sense and FUD, you know, is prevalent, but it's in the end, it's our intellectuals that are going to win.
We're winning.
We're winning.
You winning, son? Yes, Pa. We're moving a new global reserve currency into the world.
Yeah, I mean, we'll be handing down our sats for generations to come. Like that. That's how it's going to work.
Right.
We're the pioneers.
That's why, I think us, particularly in the mining industry, are very lucky. I think the first mover advantage is going to be very strong, especially at this point. I mean, obviously, we're 12 years in, and not first movers in the mining industry. Obviously, it's been around Bitcoin's whole life, but the North American mining industry, there's a big land grab to be had, and I think people getting in early are going to benefit immensely over the next few decades. And I guess that's a good segue into like another topic. Like, how do you see these derivatives markets around the industry developing and sort of hardening the ability for individual operations to hedge risk and expand their operations?
Yeah,
I think you're good. I think.
Yeah.
Sorry,
go ahead, Sam. No, I think you have a good take on this, and I can add.
No, yeah. I mean, I think we're going to see it leveraged similar to how we see traditional oil producers, you know, gold mining companies leverage their, you know, foreseen future production. Luckily for Bitcoin, it's a lot easier to project out, you know, your future Bitcoin revenue based on whether it's based on both price and expected new releases from manufacturers. It's a lot less volatile on the supply side, obviously, being the only perfectly scarce commodity I know of. But yeah, I think the more robust the derivatives market gets, whether it's, you know, selling hash rate futures or difficulty hedges or just outright packaging and selling hash rate, I think the more robust it gets, the more inclined institutions are going to be to play, you know?
Yeah. No, that's like you mentioned the oil and gas industry. That's like, I'm sorry for just bringing great American mining into this conversation wherever we get, but like that's what excites me, is getting these traditional commodities futures traders in the ONG space on their trading desks like into Bitcoin, because I think they could innovate like around these hash rate derivatives and these forward contracts and these hedging strategies. It's going to be really cool to see like more minds come to that side of the market. Like right now.
Absolutely.
You also have like, products that are rolling out like daily compounding of cryptocurrency, right? BlockFi, Gemini just rolled out their interest earning. Obviously we're all in the camp of not your keys, not your coin, but if you have a trusted, custody provider and you're getting compound interest on your cryptocurrency, why not? Another argument there too for people that are conservative and want to hold the US dollar. I mean, you could get 9% interest on USDC on BlockFi. Like, why am I keeping cash that's deflating in my bank account when I could be earning compound interest on it in a product that I personally trust? And then further into derivatives, I mean, there's new enterers on a daily basis that are allowing you to hedge and counter your bets. Financiers are willing to finance and collateralize your machines. Blockware Mining did one of the first sale and leaseback debt financing deals where we did $1 million sale and leaseback pegged to our machines. You can collateralize your miners. And that's becoming more widely accepted. All the financial tools and products that are coming to the space, look at what Lightning Labs and then Lightning Network is enabling. Like, that's a whole another ball game you can talk about. Like, there's smart contracts on Bitcoin. Don't forget that this is being revolutionized and streamlined as we speak and every single day. And once again, back to your point, I think we've got some of the smartest people in the world, working on these type of products that are enablers and are creating such abilities.
Yeah, I'm very excited about Lightning Pool and as a vehicle through which to get yield for any Bitcoin just sitting on your balance sheet, whether it be corporate or personal. We'll see how that develops. But then, like, the continuation of development of this market is so fascinating because, again, the Bitcoin native aspect of it is going to be, like, we can't even fathom what's going to happen. We have Bitcoin, which is a step function improvement on fiat currency from an asset perspective, and you have Bitcoin, the network, from a settlement network, and then Lightning on top of it as a payments network, like step function improvements on the traditional system. And these are being built on another exponential technology, which is the internet. So when it comes to how fast is this going to happen, I think it's going to happen faster than many people realize. And then, I don't think anybody realizes exactly how fast it's going to happen. I think people think it's going to be an extended timeline, but I think it's going to happen faster than most people. But on top of that, like the Bitcoin native nature of these financial products, like, again, like hash rate markets, derivatives markets, like right now, some of the products are very manual. You have companies bringing family offices and miners to the table to sort of agree on terms and durations and all that stuff. But like, if you think about the natural buyer of hash rate being a mining pool and them being best positioned to begin creating these markets, I think that is where the signal is in these derivatives markets, particularly is the Bitcoin native way of doing it. Again, and building that financial stack from mining up. I'm just rambling here, but
No, you're right. I mean,
No,
you're right.
I
You already
agree.
see it. The pools can sell their hash rate and futures of their hash rate, and lower their cost basis.
I do, and you're right. I think that system gets built from the mining layer up. And I mean, for the history of Bitcoin, cycle after cycle, what are the two types of companies that consistently might make money when they're run well? Miners and exchanges. And now we got the Robinhood GameStop debacle highlighting the need for decentralized, not only decentralized exchanges and self custody, all snowballing into that perfect storm for Bitcoin. And starting at that base layer that is the mining, offering derivatives, making it so traditional finance and institutions can draw those analogies. A lot of the tools that are being built, we're not reinventing the wheel, we're just applying it to Bitcoin type stuff, and removing the third party intermediaries. Yeah. And once people kind of get over that ignorance via lack of education, well, except I guess Peter Schiff. I don't know what his excuse is, but
what a great name to throw out there.
But
too emotionally invested.
Way too emotionally invested. But I think that, and that's what we're seeing right now, right? I mean, Bitcoin, we're just starting to get going. Like Bitcoin's still outperforming ETH. There's Bitcoin, there's Ether, and then there's everything else, in my opinion. And those are the two that Ether futures just launched on the CME. We're starting to see the most robust derivatives build out. But that's why we're seeing these decentralized DeFi platforms, liquidity pools, and particularly the decentralized exchanges, outperforming Ether and Bitcoin so sizably this year. Is, it's the lowest hanging fruit. It's the lowest hanging fruit in the decentralized finance stack, in my opinion. We have Bitcoin. It looks like we pretty much have Ether for some things on the smart contract layer, and then now is where the fun stuff begins.
Yeah. I think ETH is doing some great R&D for Bitcoin's future DeFi space. And then on top of that, like I feel like we're living in a simulation. Like you mentioned Wall Street Bets and like Robinhood, and last year you had money printer go brrr, like right at the block reward halving. Like it's almost too perfect how these narratives are lining up with Bitcoin as it moves into the future. It's like they're literally handing the new financial system over to us on a platter with all their blunders. Like Bitcoin.
Reality is strange. Reality is stranger than fiction, man. You could not write a better movie script if you wanted to.
Right.
It's like
in a simulation.
We have to. It's
partially.
And then it's like, have I fully lost my mind? Am I hallucinating? No. All right. Did I manifest this or something? What? Is this the shit you see unfolding like years from now, and then you wake up to a headline, holy shit, Elon Musk bought 1.5 billion in Bitcoin. Okay. That just got real.
BNY Mellon is going to offer it like the oldest bank in the US. What the hell is happening?
I mean, they've already had a running blockchain AUM fund and run it already before that. Yeah, I mean, it's crazy. I mean, BNY, top 10 bank in the world. I mean, all of these banks are going to start participating, but I mean, they're a little late to the game there. We're all of us the other side, we're established. Miners could, partially, to your point, can become distributors of Bitcoin, especially the pools, right?
Yeah,
that's banking of its own,
right? Exactly.
Future banking, right?
Yeah, it's it's happening.
It is happening.
Yeah,
it's but like all this like good stuff happening. I know we're all the same age. So it reminds me of like Star Fox 64, the second level where Yippee or whatever his name is, like it's quiet, it's too quiet, and everyone's attacking. I'm just like expecting an onslaught from some angle at some point. Like the news is too good right now, but hey, maybe it is just the natural development of how this plays out, because the economic incentives and forces are just too strong and undeniable. Again, the truth is just stronger than anything else that's out there right now.
Exactly. Yeah, I mean the beautiful thing is the true frothy mania hasn't really begun. If Google searches for Bitcoin are any indication, like we're not even at 2017 bubble levels yet, and that's like I think we were 50% there when we published our report in January, so we're probably a little bit closer. But I was shocked when I thought for sure we would have exploded through that, and it just underscores again that this rally, from March through now has been and continues to be disproportionately driven by institutions deploying capital. And that's on the mining side, especially, and then on the treasury side. Again, highlighted by the flight of Bitcoin off exchanges, the number of whale wallets increasing. I feel like every couple of weeks I read a new article, quote unquote whale wallets hits new all-time high. And it's just beautiful to see.
It is. And then I've been hanging out on Clubhouse a little bit the last like month, It's crazy to see the amount of education going on there and the amount of like new people that are coming and asking really good questions and learning about Bitcoin. The message is getting out there. And again, last year very acutely highlighted the need for an alternative like Bitcoin. I think your average Joe is starting to realize that. So where do we go from
Yeah, no,
here?
we should throw a couple of Bitcoin mining clubhouse sessions. I've been more of a spectator there. I was on a couple of sessions that you were speaking on. I was also going to say that, I mean, there's acceptance in Bitcoin through, if you look at like the stocks and equities that have Bitcoin exposure and their performance. I mean, look at how well PayPal has done. You know, Square, Riot,
Silvergate Bank.
Marathon, Silvergate. I mean, anyone that announces, you know, MicroStrategy, anyone that announces treasury, you know, if Twitter eventually does it, like this is people buying in a different way. You know, everyone likes to have their own an exposure to Bitcoin in their own way, shape, or form. But there's you know, boomers and people of different, you know, not just in our age range that are buying in their ways, buying these stocks, and they're not on the sidelines. They're there. These ones are buying in.
You mentioned you're like advising Riot. You have CalPERS buying Riot stock. It's fucking, that's like an underscore.
Yeah, the California pension fund just scooped a ton of Riot stock, and because they had obligations they had to make. I mean, just wait, you know, we talk about institutional participation. Just wait until the pensions start dipping into Bitcoin in some way, shape, or form. And in some way, shape, or form, they're doing that through buying stocks with exposure. We had
a couple are holding underlying Bitcoin. I think Virginia, one of the state Virginia police or something or other had been purchased a couple of years ago. But yeah, it's like you said, it's not even a fraction. Like Mass Mutual just casually threw 100 million. They're an insurance company. If anyone knows how to assess and manage risk, it's them. And they're casually just threw 100 million at Bitcoin, however it was a month and a half ago. And that was only 0.4% of their investable assets. It's nothing. It was a drop in the bucket.
And you
what happens when we see 5% allocations of this type of stuff?
And you think about their mandate as an insurance company, like for them particularly to throw an allocation at Bitcoin, like that means they're using it to protect their clients' assets, and that's how they view it, which is pretty insane. And like, thank God the CalPERS is getting, like CalPERS, Illinois, and New Jersey, like need this more than anybody in the world right now.
Me too.
They better be jumping in.
I mean, I think we were the first to put this one out, but we always are researching and writing on different stuff. But we you know, Morgan Stanley owns 10.9% of MicroStrategy. So indirectly, we met the amount of, you know, Bitcoin that MicroStrategy owned at the time, which was on January 18th. And we, you know, you can come to the conclusion that Morgan Stanley has exposure or indirectly owns 7,700 Bitcoin, you know, which at the time is worth $277 million. Like, do these mappings. These companies have all the big financial institutions. Like, if they're owning these equities, they have some type of exposure.
Yeah, Morgan Stanley's been on top of it, right? Because they have XMS spin out of them. Those guys, those guys are doing some good work too. They feel like they understand it.
They do. I agree. And they're putting out forecasts. You know, it's those that, you know, it's from in that realm. It seems like those that are not accepting or not participating in some way, shape, or form are, you know, missing the wave. And especially in that world, like, you don't want to miss that wave or a wave in general, because that.
And like Sam, to go back to what you're saying, think about the scarce nature of this asset, how much of the float is being pulled off the market. The amount of capital to come in, like I was saying it last night, like Elon just threw 400 million more Bitcoin, or 400 million more dollars at Bitcoin than Michael Saylor did, and got about half as much Bitcoin as he did. And when you think about those numbers continuing with other big institutions and less and less amount of Bitcoin that each is going to get,
there's only ever going to be 21 million Bitcoin. Right now there's about 46 million millionaires in the world. If every millionaire wants a Bitcoin, too fucking bad. It can't happen. It cannot happen. And excuse my language, you're gonna have to edit me out later, but it
hey, you can curse on this podcast, don't worry.
Okay, cool.
No fucking cursing.
But I mean, it's surreal. Like, if you're looking, you just even still the top half of those 46, call it the top 23 million millionaires. if any of those guys want Bitcoin, they're not going to want just one, like it's people with that kind of wealth are go big or go home type individuals when it comes to investing. It's the floodgates are creeping open, but they have by no means fully opened yet. And it's just very exciting.
Yeah. Furthering your point, Sam, before Marty jumps back in, I put out a tweet like on Jan 24th, like there's 7.7 billion people on this planet. Like if everyone wanted a piece of this scarce Bitcoin, it would come out to 0.0024 Bitcoin per person, which at the time was worth like 15 USD per person. I mean, that if you talk about the scarcity of this asset, if every person in the world was allocated an equal amount, that's the amount they would get. And that's it.
You're only getting like 240,000 sats or whatever, or
yeah,
2 million if that. Like,
yeah, exactly. It's crazy.
What a time to be alive, gentlemen. It's a pleasure to be on the front lines with you guys.
What a time to be mining Bitcoin.
Right. Should we get back to mining then? This like what do you guys see? What are you looking at moving forward in 2021, particularly for the mining industry broadly, and then in North America specifically? What are you excited for? What any theories, ideas?
Yeah, well, I mean, we're pushing the wave on pushing out a North American Mining Alliance. That's the initiative we're working on that I think will get some really nice traction. I think we need to leverage and pack together on that front for the greater good. I think we're going to see a lot more miners come to North America. If you just simply track the supply chain and you look at the orders that companies like Marathon, Core Scientific, Riot, even Blockware, we order thousands of machines, Blockware Mining. A lot of the supply is coming here. We estimate that Maine can only produce like 30,000 S19s per month. If they're taking the month of Feb off, and you just track the supply chain, it's the hash rate's coming here. Just if you just track what's being produced. Same for what's miner. I mean, there's rumors that like certain companies have bought out like all of what's miners 2021 stock, and I mean they have spot production that comes in, and it's all coming here. So I mean we see North America emerging as a large mining presence and helping to decentralize that network. I see retail. A lot of our conclusion of the report is retail hasn't entered yet in Bitcoin. So, there's indicators you can track that. But retail still has a chance in mining. Don't feel like if you're a retail or small participant, there's companies that enable you, like Blockware Solutions, for example. We can give you good energy rates and machines on hand, and you can participate and enter. Mining's an awesome thing to be a part of. And sometimes, we talk to our friends or family that don't understand Bitcoin, let alone Bitcoin mining, and they think that we're aliens. But Bitcoin mining is not as complex as it lays out to be. It's a pretty understandable system once you get the hang of it. So I just see,
and the understanding of the market dynamics is becoming much greater, right? Like Leo Zhang's recent piece on like the fair value of the miners compared to your price per kilowatt hour, I think was extremely well done, and like really helps individual mining companies try to conceptualize the timing of all this and how they should be approaching the deployment of their capital.
I don't know if I've read that piece. You're gonna have to share that with us after we get off of here.
Yeah, I'll send you the link. It's really, really well done. Yeah, right. Like the industry is just getting wiser, and hopefully smarter business decisions and more efficient business decisions, and by extension, more decentralized and robust Bitcoin results from that. So bullish.
Yeah, I mean, definitely bullish. And each cycle, just from the mining perspective, we see hash power become concentrated in the hands of more and more efficient miners who are in it for the long term. It's kind of eerie how close Bitcoin sticks to these 4-year cycles, that surrounded these halving events. Like, I mean, so the average percent return on Bitcoin for a halving year is 206%. So that's, if you look at 2012, 2016, and 2020. 2020 halving year, we outperformed that average 304. We returned 304% Bitcoin price. The average return for Bitcoin the year after a halving is 3,382%. Year in and year out, it outperforms the year after halving, as opposed to the year in halving. Like halving's a good year, and then the true supply shock of that halving event, and the fact that it's now only efficient miners that don't need to sell as much of their Bitcoin to cover OpEx. They can sit and accumulate while the narrative just continues to grow, and the broader macro environment, central bank, monetary, fiscal stimulus, and otherwise, all continue to feed the story, feed the demand, while the supply continues to get systematically reduced every 4 years. And like clockwork, 2021's off to a great start. Now, again, this halving year outperformed previous halving years, but I don't expect that this post halving year to meet that 3,382% average. That would put Bitcoin over 700K, I think. But
why so bearish?
Oh, that's a 2022 goal.
But like that, I mean,
It's really not. It's really not.
It could. I mean, at these trajectories, it's feasible by.
And again, I'm looking at the chart in your most recent research piece of like the amount of Bitcoin coming off exchange and compare it to previous halvings. Like go back to 2016, go back to 2012. Like you can't really see the 2012 levels, but
you want
how little Bitcoin there was. But like
you want to look at the eerie similarity. Look at the comparison to Bitcoin price versus hash rate charts. How after halving events, you see the brief minor capitulation, which the dip in hash rate, and then just a steady march higher despite Bitcoin trading downward or sideways. And then once price catches up to hash rate and starts printing new highs, hash rate can't keep up. It just massively, price rallies significantly faster than hash rate can. And that's simply because of supply constraint on miners. There's just not enough chips and rigs to go around. But those times when Bitcoin finally catches up and then starts to exceed, that's the best time to be a miner. And that's 2020 looks very, very similar to January 2021. January 2021 looks strikingly similar from a price to hash rate perspective to January 2017.
Right. And it's going to be so interesting to see how it plays out this time around, considering the type of money coming in, the amount of money coming in, and then you factor
the time frames associated with those type of investors. Like those guys aren't spibbing for 5-6 month positions. Those are multi-year investments.
And then you have like the extension of the life cycle of the hardware too, which plays into this to a certain degree.
Absolutely.
As well.
You throw the inefficient stuff in immersion and in a cheapened electricity environment, and you can run for a lot longer.
Yeah, it's going to be exciting. Gentlemen, I know I have you on the calendar until 1:30. It's 1:29 now. I don't want to overextend my welcome with your calendar. So I guess, what do you guys want to get out to the audience who may be listening to this? Any final thoughts, words of wisdom, places we can find what you're working on, any information you want to point us towards?
Yeah, definitely go to blockware-solutions.com. The report we were discussing today, you can find top left in research and publications. Check out some of our recent media mentions. We're constantly getting quotes and getting our messaging out there. I'd keep strong hands, right? If you're a miner, mine through this. There's going to be corrections. As Sam was alluding to, there's like 7 corrections in 2017. Keep mining through that. Keep hodling your Bitcoin. Keep your strong hands, right? Weak hands always fail, and historically we've seen that, and we're really excited for what's to come. We also have Blockware Mining, which is our self-mining entity, on target to have over 300 petahash in March. We're opening up the next capital raise round, so there's opportunities to invest if you want to get on the other side, and that company also owns the facilities, and you have that data center land exposure. And for those that are interested in mining, reach out to us. We can set you up. You can sell your machines with hosting contracts. Kentucky's a great place to mine. We've been domiciled there for a long time, and we have great techs and team in place to support with technology. So happy that we were able to join you today, Marty, and it was a great jam session. Sam, anything else to add?
No, it's a pleasure, Marty. keep up the great content. You're doing a great service for the space. If you're follow us on Twitter too. I think that's the only thing Mason forgot.
Yeah, at Blockware.
But other than that, I think just enjoy the jam sesh. Looking forward to another one soon.
Yeah, we'll definitely have to do another one. I mean, it's people like you that make this content easy. So thank you.
Thank you.
I hope you guys enjoy the rest of your day.
Take care.
That's all we got today, freaks. Peace and love.
Love that noise.